Hello, it is Wednesday the 10th of September. Let's take a look at gold and silver technicals, because the question on everybody's lips is this rally going to continue? Is it too late to buy? Should we buy here? Should we buy pullbacks? How far will it continue? So I thought I would take a bit of a deeper dive. I definitely still like gold and silver, and the main reason is that the dollar is still falling, and I still prefer silver over gold, not just because I hear lots of people talking about the short squeeze at COMEX and how many shorts there are. Quite often with these positions, they are offset. So I'm not saying we're not having a short squeeze. Certainly the technicals look pretty good for a continued run in silver, and so we'll talk about that as well. So first of all, let's take a look at where we are in the dollar. So in the US dollar, this is the dollar index, which is pretty heavy on the euro, but pretty good technicals. We have been, since the '08 market crash, when that began, the credit crunch, we have been in a really clear rising channel in this one, with very clear three-wave measured moves lower. And when we look at what we are doing here, from the high that we made in October 2022, we had a very clear B leg in the middle, and here is our next leg lower. Is this going to turn into, is this over? I think one of the things about when you draw a channel like this, or a trend line, or even a horizontal level, third touches are very often false breakouts. So if we look at this rising channel, we could argue that this was a third touch false breakout. Certainly this was, and then it held within. So if we're going to do the same from this low in 2011, here, this was a solid touch, this was a solid touch, and I would expect, if we're going to stay within this channel, this to be a false breakdown, and then we regain the level. And I wouldn't be surprised to see that at all. And if this is a measured move, I would expect there to be a mathematical relationship between these levels. So if we draw that in this DXY dollar index here, that gives us an equal measured move down here at 94. If we take a look at fib retrace levels of this most recent swing, for me, I think if we're going to keep trending higher, I don't want to see this close underneath a 786 retrace of this swing. I kind of feel like that 786 is like the last line in the sand, which the markets very often test. So for me, that kind of would be the level. So if I put that in here from this high to low, you can see 94 is also where this 786 fib level is. So I'm kind of leaning on that. One thing I will say, if these fib levels are valid, I can see that, we certainly have seen a reaction at the other levels. So I'm going to lean on them and say that 94, this is not over. I expect a false breakdown of this channel, and I expect 94.68 of the dollar index to be support. And as long as this keeps falling, then I expect commodities and things priced in dollars to look better, and that certainly includes shiny metals. And certainly if yields are going to continue to rise, and if the Fed is going to cut rates, they're quite strong drivers for gold. And so the Fed cutting rates certainly doesn't help the dollar make a bottom and rally. So this is where we are. I expect this to continue, and as long, there is obviously going to be a little bit of fuss around this trend line, but I expect the really good support here down at 94.68 in the dollar index, where we also have an equal measured move. Well, the key question is, when you bounce from this level, if we're going to stay continuing lower, we won't get above this 61.8 level here, which is at 98.97. So that's our resistance. We stay in a downtrend if we get stuck here in the dollar. And if we do get above it, then the typical fib pattern, when you bounce from a 786 fib, is up here then at 105. So our trade then would be between this 98.9 to 105. That is the first bounce, and then you would usually see it kind of come back into the middle and then decide which way next. Are we going to continue lower, or are we going to keep going higher and stay within the channel? So that's how I see the dollar lining up going forward, and so I don't think it's bottomed yet, and so that means for me I don't think this swing or this move that we're seeing in gold is done yet. So let's start with gold and talk about where we are. One thing you can say in any market, when the longer when you make a bottom or you make a base or you trade sideways in kind of accumulation distribution phases, the longer you go sideways, usually the more powerful the move out, or the longer it lasts. And that's certainly true in gold. And if we look particularly back to 2020, 2024, and this 2023, sorry, and this sideways range that we moved, when we broke out of this sideways range, we had a typical triple top here. So this was a horizontal level, but we got that false breakout when we here in May 2023 we had a nasty 50% pullback, but when we broke out for real we kept going. And so this was the really long accumulation phase, and what we're seeing out of this low is a really bullish move. Now when we get to 5 waves I would expect a bigger pullback, but I don't think we are. When I look at this low we made in November 2022, I kind of see this as wave 1, wave 2, and I think we're still in wave 3 here. And when I look at this, let's go down a time frame to the weekly. If we go back to this low, this is 1, 2, 3, we've just done a wave 4, so we're in wave 5. That kind of helps us because and this 5 wave correction triangle that we made here is very typical for wave 4. Very you don't see them in a wave 2. So wave 1 and wave 5 very often have a mathematical relationship. So if I measure from this low to high, and by that I mean equal, and I'm going to go from the bottom of the E leg, so we go 1, 2, 3, 4, 5, and we measure from here, then we can give ourselves some targets. We've gone through where this wave 5 would be 61.8 of wave 1, and to be honest, from this low we would expect this to finish in 5 waves, and we haven't done that yet. So far we've just done 1, 2, 3, so in this we're in another really strong wave 3 here, and that's exactly how it's behaving, really trendy, the strongest part of the trend. So we can say that for a minimum, for this swing of wave 3, we would see of this wave 5, sorry, where wave 5 and wave 1 would be equal, would be at 3,735. That would be my first target level from this swing. But quite often this wave 6, if everything continues and the dollar continues and the stress continues, but the stock, as long as we don't have a market crash, because that usually brings gold down, then we could very easily go 1.618 of this wave 1 in this final leg. Remember, I'm measuring from the lows in September 2022 to the highs in May 2023. If we go to 1.618 of that swing, that takes us to that lovely round number 4,000. So I think we might have a bit of a wave 4 around this 3,700 level, but I would not be surprised at all if we continue to 4,000 before this wave tops out. Now we still have one more shallow correction, and I don't expect this back underneath. We're not going to come back and fill that gap yet. I don't see this closing on a weekly back underneath 3,500 before we get to 3,735. So those are the kind of parameters for the next swing. So for me, gold is still very bullish, and we are in a really strong trend. At some point, we are going to have that wave 4. And wave 4s can be a little bit funky, a lot of different shapes. This is our wave 2, so it's not going to be a simple 3-wave correction. It could be a triangle, it could be, a whole bunch of patterns, and then I think that this continues higher. Because it's so stretched and because it's so far from these daily moving averages, if you haven't got any and you're wondering about buying more, I think we kind of need to see that pattern play out. A lot of people say, is this going to keep going? I really so a lot of the drivers, we can talk about the macro drivers, but let's talk about where this bottomed. And this in gold, and if we go back to the monthly, this gold chart bottomed in 2022. And we have seen this parabolic rally since 2022. And so we have to say to ourselves, well, what happened in 2022 that would have triggered this move, such a strong move into gold? What happened in 2022 was Russia invaded Ukraine. But Russia didn't just invade Ukraine. What happened was the European Union and the United States sanctioned Russia really strong and seized all of their deposits that were in bonds. So they had invested in US treasuries and European treasuries, and they were seized. And that sent a little bit of a shockwave around the world to countries that invested in US bonds that are not so friendly with the United States, like China and particularly India. India just released some data last week, I think, in Times of India, about how they are selling US bonds and they are buying gold, and so many central banks are doing the same. So this has been, this de-dollarization and BRICS countries moving away from the dollar, I think, has been the biggest driver of what's going on in gold, and I don't see that happening changing anytime soon. I think things are getting trickier and trickier. So we can talk about yields and, but this move in gold is a lot of foreign countries, and that is the reason why. So that's how I'm seeing gold. I think we're a little bit overstretched here for new positions. A pullback here towards 3,500 and then a turn higher again on the daily, I think, is set for at least 3,700, and the low 3,700s, 300,735. But I would not be surprised if things get tense to see 4,000 from this move. So that's where we are with gold. Let's talk about the gold and silver ratio, and this is why I prefer silver to gold. So the gold silver ratio, this is a monthly chart of the gold silver ratio. And when I remember back here in 2020 thinking, gosh, gold is going to go up forever against silver. And then of course we had this really nice pullback and a sharp drop. Markets almost always make 3-wave corrections, and one like this one here, if we go back to 09 and 2011. And one of the features for me that makes it really obvious that we've made a correction, you can just see this as a kind of smaller scale one, is this B leg in the middle needs to be 3 waves to really convince me as well. So it'll be 1 and then a 3-wave move and then a second swing. So if we look at this and we expand it out, what it's looking to me like it's doing in this gold and silver ratio is that this was our first swing higher, this is our A, B, C, and potentially we have got another leg lower, which means another leg lower of gold underperforming silver and silver continuing higher. And usually, remember, these 3 legs have a correction. Sometimes it's the third swing is 0.618 of the first swing. Sometimes it's 1.618. Sometimes it's equal. So I suspect that we continue lower in this gold silver ratio, and I think that we retest these lows and this kind of really strong pivot level through the middle in this gold silver ratio chart around 67.5. So although we may have a little bounce here and gold is having a bit of a moment, I still think that silver continues to outperform. And yes, it might be because of a short squeeze, and it may be just because gold's made its move and silver's next. So when we take a look at where we are in silver and we see where we count from, this is another one. So many markets this year. So, in terms of gold and silver, it's in terms of a very similar swing. But if I go back to 2020, I think this is wave 1, wave 2, and we're in a really extended wave 3. So it's a slightly different count. And we're in this wave 5 of this wave 3 in silver. And when I look at this, this is from the April of this year low when so much bottomed. This is 1, 2, 3, 4, and we're in wave 5. And so potentially I would look for 5 waves to finish here with a mathematical relationship to this wave 1. And for me, that kind of puts it somewhere around 42,000. But, you know, wave 5s can extend a long way. So, you know, the trend isn't over until it gives you a really clear reversal signal, which is why trend trading doesn't always get you in and out at exact highs and lows, but that's where we are with this one. And so I when I count from this low that we made in August, I see this as a wave 1, a wave 2, a wave 3. I think we've got a wave 4 and we've got another leg higher. So at the moment we are having a little pause where this wave 5 is at equal to wave 1. But because we haven't got a complete swing here, I would expect a wave 4 and then another push higher. And then probably the target, it comes in at 44.9. And potentially, you know, we go higher than that to the 2.618. And really, one of the really big levels, you know, and anyone who was trading then back in 2011, 2012, when we retested these highs in silver, this was quite a moment. I would not be surprised to see this level tested again. And when we got up here, everyone is talking about it. The closer we get back to that 48 level, I think everybody will likely be talking about it as well. And if we think that this actually is, we're ending this wave 3, if we measure from the low here in silver to this high and measure, the most common relationship would be this wave 3 to be 1.618 of wave 1. And if we do that here, we can see that that gives us 47.48, which in fact really does take us up to this 1.618 extension and these previous highs, and we retest the 1980 highs in silver. So we are at this where we are 1272 of this swing. So this is kind of a place where we may see a little bit of a shallow pullback, but no, I do not think that the that this move in silver or this trend higher is over, but I do think we're kind of at a place where we may see a little bit of a wave 4, a sideways correction, and that's what I would wait for. If you haven't got any silver, I think that that would be it. Remember, this is a monthly chart. I would wait for that. And so we are a little bit sideways this week at this 1272 level. But long term for me, we're headed higher, maybe 40, maybe just it's 42 and we see a shallow, but I actually think that we could stretch all the way and 47.50 would be a better place. And the better pullback that we get this month, the better shot I think that we have that this keeps going. So long term, this is a little bit of a correction going on here. It's a wave 4. Remember, sometimes this can end up being 5 waves, and so we are still trading sideways. For me, I would really like this as a daily buy to reset and even a pullback to the daily 20 moving average. So expect a little bit more sideways. Round number 40 in this swing low, this kind of on a lower time frame, previous swing low, is quite possible here in silver. So not a buy here, but I don't think that this is over. I think we are still in a buy dip place, and both gold and silver have more to go based on the ratios, based on the relationship between them, based on what's going on with the dollar as well. Let me know if you've got any questions. Platinum is its own beast. I think I need a separate video for that.